Hey, what's going on guys? Welcome back to another YouTube video. So today I want to share with you 3 big tips that will help you become a more successful trader. If only I knew then what I know now, I would be much more advanced than where I am right now. So I want to be able to share these with you guys, as I know these will massively help you in your journey. Regardless if you've been trading for a week, 2 weeks, 2 months, 2 years, whatever it may be, these tips will massively speed up and help your journey. So there's a lot more tips than this, but these are my 3 main big ones that will massively speed up the process for you. So let's get straight into it. First things first, risk management, the biggest one. I had no risk management when I started at all. I didn't even really know what risk management was apart from using small lot sizes, but that was completely the wrong way to trade. And when I hear people tell me now that they've blown accounts, I also blew an account. I think I maybe blew 2 accounts because I had no risk management at all. I had no plan. And what I know now compared to what I did then is I didn't have a certain risk parameter per trade, whereas now I only risk 1% per trade. I always say to everyone, risk 1 to 2% per trade. Start off with 1, then after you've gained that confidence, then you can potentially move up to 2, but it might not even be necessary for you depending on your style of trading. Also, let me know below, tell me, have you ever blown an account? It's okay, don't be shy of having blown an account. I've done the exact same. Most people who start off in trading have no risk management plan at all. I certainly didn't, and I'm sure there'll be a lot of you guys watching this that don't either. So don't be embarrassed of it. Let this be a lesson for you now to completely adapt your trading. So that's the biggest thing. The number 1 thing that you need to build into your risk management plan is risking 1% per trade. Also, part of that is, regardless if you have £100 account, £1,000 account, or £100,000 account, you need to be risking 1% per trade and treating trading like a business, because that's what it is. If you can bring in the consistent percentage returns, then the money will follow, which we'll go over later in the video. And with that, I would also say go for a minimum of 1 to 3 risks to reward. I used to try and go for a 1 to 1 or a 1 to 2, but then my winners wouldn't outweigh my losses because I didn't let them run enough. So I would say go for a minimum of 1 to 3 risks to reward. Let's say you have a win rate of only 50%, not huge. You go for a minimum of 1 to 3 risks to reward. You take 10 trades. Out of them 10 trades, you lose 50%, you lose 5, that's minus 5%. Out of the other 5, you win. Them 5 that you win are a minimum of 1 to 3 risks to reward, so 5 times 3, that's 15, okay? 5 minus 15, that's 10, quick math. So you now have a profit of 10%, only risking 1% per trade. That's absolutely fantastic, and this is why you don't need to overexpose your account, because a 10% return is very, very good, and this shows how doable it is, simply just going from a 50% win rate and a 1 to 3 risk to reward. And then the next part of risk management is, do not change your risk management depending on your emotions. Do not let ego come into your risk management plan. So off these risk management tips, write them down, stick them in front of your screen, whatever helps you, so you constantly have that reminder. So sometimes if you win a trade, or it's not necessary just when you lose a trade that you feel the emotions. Even when you win a trade, you get this euphoria, and then you want to start upping the risk because you feel good, you feel confident, and you're ready to hit the next big jackpot trade. Well, don't do that. Do not let ego define your risk management plan. Regardless if you had a win or a loss, stick to the same risk per trade. And like I say, if you gain that confidence over time, over a long period of time, then you can look to up the risk, so you could go from 1% to 2%. But then if you go for 2%, you have to stick at 2%. You can't go for 2% for a few trades and then you lose a trade, then you're like, okay, right, I'm gonna go back to 1%, and then that time you go back to the 1% would have been the one which would have massively outweighed your losses if you'd stuck to 2% risk per trade. So it's a very, very tricky game if you start messing around. If you start messing around with the risk per trade. So pick your risk parameters and stick to them. Do not let your ego or your emotions tell you different. And then my last risk management point that I would have told myself is build a plan. So like these tips that I'm giving you guys, start to build a plan from this. And like I say, stick it in front of your chart, stick it up on the screen so you have that constant reminder, so you never break your rules. Your rules being 1% risk per trade, going for a minimum of 1 to 3 risks to reward, and constantly sticking to that. So if you do this, it's impossible for you to ever blow an account. Unless you take 100 losses in a row, then you're gonna blow an account, but the probability of that is very, very slim. At some point, whether it's luck or skill, you will get a winning trade that will start to outweigh the losses. So correct risk management, it is almost impossible for you to ever blow an account. So do not ever, with these rules, blow an account again. Also, also guys, before I go on to the next point, I see way too many people doing this, and it's more so with smaller accounts. I did this myself, so don't be embarrassed. Stop using random lot sizes. It doesn't make sense. You have to have strict rules like I've given you to then calculate your lot sizes, calculate that risk. Otherwise, if you have random lot sizes, then you're never going to be able to control that risk because you don't know what the risk is. Don't use random lot sizes, and that's my last point. Point number 2, and these are in no particular order, is trade with the trend. I'm laughing because I did this so much, and I think so many new people do as well, where you try and catch the bottom or the top and catch the next big reversal jackpot trade, when all you should be doing is following the higher time frame trends, of course, depending on your style. But for me, swing trading, higher time frame trend, that's all I'd be looking to follow. And one thing that I like to do is I like to wait for all time frames from the daily down to the hourly to all line up the same. So if I'm looking on the daily and we're in a nice bullish trend, then I want to go down to the hourly, and if the hourly is looking bearish, then I want to wait for the hourly structure to line up with the daily, and then all time frames line, and that gives me more confidence to follow the overall trend. Which leads me on to point number 2 of trading with the trend, is don't listen to overbought or oversold indicators. I had way too many overbought and oversold indicators that I thought were the golden jackpot trade. I now don't use indicators at all, but you can use indicators. Moving averages are nice, but in terms of looking at overbought and oversold indicators, don't use them. They can stay in overbought and oversold, like the RSI can stay overbought for days to weeks. So do you want to rely just on that and sit in drawdown for days to weeks? Absolutely not. And remember, these are lagging indicators, so nothing can beat being able to read pure price action. So focus on being able to read the art of the chart and don't rely on indicators. And a saying that I know now that I didn't know then was trend is friend, and it's so true. Trade with the trend. Don't try trade against the trend because you're just going to get burnt out. You don't need to catch the next big reversal to make some good profits. So guys, the last point out of this top 3 is stop focusing on the money right away. The emotional attachment to the money is what massively held me back in the start of my journey. I was so obsessed with making money right now that I wasn't focusing on the journey, and the journey is the best part looking back on it now. What I say to everyone is trade demo for as long as possible. I personally went straight into a live, lost money, and then went demo. I did it the complete wrong way. Whereas you should be going demo, consistency, then going live. You shouldn't go live straight away with no experience. You should be going demo that way. I did it the wrong way. That's why I'm sharing these things with you guys, so you don't have to do these mistakes. So yeah, don't focus on the money. If I could only look at myself 4 years ago and be like, look, the markets are going nowhere. The markets are gonna be here in the next 5, 10 plus years. The markets are going nowhere. You will make money if you can prove to yourself that you can make consistency. So focus on gaining the consistent percentage returns, because then that's transferable to all account size. Later down the line, you can take that to investors, go for funding, whatever it may be, but focusing on just the money right away isn't the way to think. If you know and you've tested that, look, I can make 5 to 10% a month on £1,000 account, that's fantastic. That's really, really good. Although you may look at the money and be like, well, that much a month isn't that great. Transfer that mentally over to £100,000 account. 5 to 10%, 5 to 10,000 a month. That is a very, very good salary, especially from trading from your laptop, doing what you love. It's very, very good. It's much better than, in my opinion, than most other jobs in a 9 to 5 sitting in an office. So if you're just focusing on the money right now, shake yourself and tell yourself these markets are going nowhere. If you can bring in the consistent percentage returns, the money will follow. The money is a byproduct of learning the art of trading. So that's my 3 main tips for you guys. Of course, there's a lot more, psychology being the biggest, but I explain this in the private community where I share recorded audios of myself, which the guys listen to on headphones whilst they're going out for a walk, whatever they're struggling with. I do a lot of psychology audios included in the community. So if you want to learn any more about that, then you can check the link in the description. But I hope you guys enjoyed these tips. Number 1, risk management. Number 2, trend is friend. Follow the trend. And number 3, stop focusing solely on the money right now. The money will follow. I hope these helps you guys, and I hope you can gain some really, really good tips from me. So if you did like this, please leave a like and let me know in the comments, have you blown an account? Have you broken risk management rules? And I will share my journey with you too. I am never afraid or embarrassed to share losing money and losing accounts in the beginning. We all go through that, and it's the ones that stick at trading are the ones who come through on top at the end. So guys, please subscribe, and I'm gonna be doing a lot more of these videos. I hope this helped you, and I will see you in the next one. Thank you.